I'm delighted to be joined by Petronella West, CEO of Investment Quorum. Petronella, you mentioned in the panel session that it's very important for a boutique like Investment Quorum to own its own data and infrastructure. Why is independence so important?
There's a lot of consolidation right now in the financial services industry. And I think we've just seen from recent reports from the FCA that it's not necessarily delivering good client outcomes. It might deliver cost efficiencies in the mergers of larger organisations. But the client journey is something that we really value the most. And I think being independent means that the client can be really reassured that we're looking at the whole of market before making recommendations. But it's incredibly hard to be independent and under the regulatory framework of things like consumer duty, MiFID costs and charges. The incentives are to try to reduce the burden of regulation. Still, there's a lot to do. So it's difficult for firms like mine to stay independent with that burden. Doing a digital transformation of technology has been key to ensuring that we've got more choice over what the future looks like for both the investors, the clients, and the staff at the company.
You said you invested a lot in AI, so what's been the biggest benefit?
First job was to own the data and get it into a universe where we knew we had clean and good data, and then that's over 6 years ago, and since the AI tools have developed from simple things like meeting notes and summaries, which is a very basic part of AI, to augmenting individuals, to using deep research, to challenge the research we've done, to improve on how we communicate with clients. I mean, it's even simple things like presentations. You know, we kind of sit in a room with 4 or 5 people discussing how we're going to brainstorm a webinar or something for clients. Now what we do is we prompt AI with all the goals and outcomes, and then it delivers that for us in about half the time. And then you can obviously strength test it. So it's basically mean that we can use so many different aspects of it to improve the client outcome at the end of the day. The investment's been in the people. I don't think the technology is that expensive anymore. I mean, our operating system was $45,000 a year, and then we moved to a Notion-based Silicon Valley. It was $4,000 a year. You can't argue with that in terms of cost.
Certainly not. And how is that impacting talent, the talent you hire?
Things like Slack and Notion and app technology means that the journey that our staff have with our clients using technology is a bit more fun. We kind of augment their skills better so they can focus not on the day-to-day essential and important things as part of doing their job. If that can be taken over by AI, then it means they've got more time to spend in front of clients, so we can augment talent. And what we're beginning to see is our client services team move into the financial planning space and the wealth management space simply because they're on the front line with the clients more now and less in back office doing administrative tasks. I might have to pay them more as a result of that, but it means that when we're looking forward ahead in terms of our business, then we're going to have very highly skilled individuals who don't have to do that kind of day-to-day boring jobs that people don't like, you know, when they come to work.
And how do you measure the success of investing in AI?
Well, it should deliver quite significant profit margins to us on this latest digital transformation. So getting our clients off older technology onto newer technology, we can control pricing, it's more transparent. And as a result of that, we can also take a percentage of that ownership in terms of how we deliver. So it delivers significant profit to the bottom line, very little upside on the cost. So it's going to make us more profitable. That's better for our investors. We can pay higher bonuses. And overall, hopefully, reduce the cost of financial planning for our customers. And then we can offer it to a wider audience.
Looking 5 years ahead, what will the wealth management model look like? More consolidated and platform-driven or more niche and personalized?
Investment solutions for clients are going to come at very low cost. We're seeing 10, 20 basis points. So consumers will be able to buy financial products at a much lower cost. And I think what we've got to deal with in wealth management is that there's a lot of expertise, it's very valuable, but it's in a different part of the food chain. Consumers still want advice, consumers need advice, there's a massive savings gap. And I think wealth management has a massive part to play in that. It needs to turn its entire focus on what the consumer outcomes will be and not necessarily on the bottom line on profitability. Platforms will get cheaper, platforms will get better. You know, and I think technology will improve, and it's being challenged all the time by new entrants to market. So you've got to kind of just stay up with it. I think what's here today will not necessarily be here tomorrow. You've got to work out that it's right for your business model.